Hello traders, welcome to the weekly outlook and setups volume 233. Iliya here. You know what we're going to be doing, having a look at the markets, how they developed this week, what kind of opportunities we had, and most importantly, what we can expect for the upcoming week, because it's gonna be a huge week. Now this week we also thought it's gonna be great, but it wasn't. We chopped for 3 days, we had a move on Thursday without any sign of that move actually happening, and then we chopped again. I only took one loss, and then I took a win, but I'm overall kind of break-even-ish. Really slow week, really boring. But again, next week, potentially, as we keep saying, every single week could be better. So again, we keep showing up, as that is what trading is all about. So without further ado, let's jump into the analysis because we have a lot to cover. All right, we're gonna start with the economic calendar, and we have a lot of work to do right here because every single day starting from Tuesday, we are having quite a few important news. Now, how I do frame the week is Monday is an absolutely not trading day because we don't have any news, and pretty much that day is going to potentially prepare us for all the things that are to come. We're starting with JPY monetary policy and AUD monetary policy, CPI for CAT. So again, on Tuesday, I don't see USD much. I don't see Euro. So on Tuesday, there could be some trades on the JPY and the AUD and also the Canadian dollar crosses. Think about Aussie JPY, think about CAD JPY, think about USD JPY even, right? CAD JPY, stuff like this. But that is only if you're looking to trade those crosses. If not, I would suggest that we wait for Wednesday. Now, when we have a week like this, it's usually a little bit boring because you have to wait for that news release to come out. And what we have this week is FOMC. And that is pretty much one of the top most important. It's not really a news release, but pretty much the interest rate decision. And then we have the press conference. That is, I would say, actually the more important part, right? Paired with that, we have GBP CPI, we have a speech for the euro. So again, London session could be nice, but I don't think London will do something on Wednesday because it's going to be preparing for the night. The news come out a little bit late. That is going to bring a lot of volatility potentially to then have a massive Thursday. Like, just look at all those news. Aussie, Euro, Swiss franc, Euro, GBP, right there, USD as well. And we also have here a bank rate for the pound, which is also very important. So if you want to trade the GBP, then you also want to wait for that one, right? Because that is pretty much the interest rate, which is, again, one of the most important news releases when it comes to a currency pair, because essentially what actually determines the strength of a currency is the interest rate. And we have JPY, AUD, USD, and GBP interest rates this week. And then on Friday, we kind of finish a little bit slower. We have a speech from Powell. Once again, very important news. London session could be nice with some Euro and GBP news. So everybody, we are up for a very volatile week that is potentially going to, once again, determine what are we going to be having for the rest of the month, which is already ended. But then, of course, we have Q2 opening, which is usually when the market starts to move the best. So with that being said, let's jump into the charts. All right, let us initiate with the dollar as usual. Now, if you remember, this week, we had a week full of USD news, and we thought that the market is going to be incredible. However, I would say it was rather choppy. It was rather choppy on most days, and then we had a move after some news, and then pretty much it ended up doing overall nothing. It's giving us right now mixed signals. Now, if you have a look on the monthly time frame again on the DXY, we have been looking at this monthly imbalance for quite some time right now. Of course, since we were down there looking to retrace up there, we're finally here. We rejected on February, and right now it looked like we wanted to print a very nice bearish candle, but this week we fully retraced back. And this, to me right now, it looks like, so we're going to explore this one, it looks like we are sweeping. We're taking the liquidity below the previous monthly low, which is usually a very important liquidity point. So there it is. On this week, last week, we had a very massive expansion. So we think, okay, wow, we are finally reacting from that monthly imbalance to potentially go lower, right? And again, what I wanted to say this week is, of course, the candle 3 of a potential imbalance being created. Now, a lot of you might not be aware of imbalances. I do believe a lot of you are. I'm going to be making some videos very soon as I'm still kind of wrapping my head around it. But we're creating right now a weekly imbalance that is going to be the first kind of resistance area right now that we're going to be encountering into the incoming week. However, if you watch the news overview, we're having so many important USD news that, again, at that exact time, technical analysis and like trying to forecast where the market is going to tap and where the market is going to go is honestly a little bit useless. So I'm actually not really going to do any analysis, and I'm just going to wait for that FOMC to come out and then, of course, adapt, because that is what trading, according to me, is all about. But of course, right now, I do not like this third candle on the DXY. It's super bullish. It's not showing me a lot of bearish intention. And although we're creating a weekly imbalance, not sure how much of an importance that is going to hold into the incoming week, because the daily time frame is showing us early signs for a potential reversal. Now, again, I really don't want to call a reversal. I really don't. I just want to read the signs. Here we have that daily imbalance. That is the very recent imbalance after we took out that low. And this low was actually pretty major, right? You saw that was the previous monthly low. We closed below it. We stayed below it. So I didn't really expect for the market to go all the way back up. It doesn't make sense. If it wants to continue lower, it, again, I don't want to use this language, but it should have potentially tapped into this daily imbalance and already start continuing lower, again, targeting some of these lows. But that didn't happen. This week, we pulled back on Monday. On Tuesday, we had news we rejected. On Wednesday, we tried to push, right? So 3 days overall consolidation. And then on Thursday, we finally just popped out of nowhere. We opened and just massively pushed, traveling right now towards that second daily imbalance that the market is currently responding to. But I'm not going to really look at this, because what do we actually have building up right now? We're having a new daily bullish imbalance that potentially suggests a first sign of a shift in order flow. Okay, so what are we currently doing on the DXY? We are in a little bit of a 50-50 situation. It is a little bit of like, okay, so monthly is swept, daily time frame is starting to reverse, but weekly time frame is still giving us that bearish sign. So again, a lot of things could happen. We can first of all tap into the daily, then that could be a potential long to target the weekly. We can first of all tap into the weekly, then react, tap into the daily, and then pretty much is going to be a matter of seeing how this one is going to react and whether we push the market higher or whether it's just going to go down. Okay, so a lot of scenarios could potentially happen, but I want you to keep your eyes on those two areas and to potentially try to evaluate what the order flow is going to be like, potentially Monday, Tuesday coming into Wednesday. But of course, Wednesday can just simply destroy everything. Now, again, on the hourly time frame, super choppy this week. Like, we started on Monday with a chop, Tuesday popped up, then it started reversing lower. Then it did look like it wanted to push lower. We had that imbalance here. The market tapped and rejected, and then all of a sudden actually started flipping higher. We had hourly developments down there, and yeah, it just popped very nicely higher. And right now we're just at the top right there between a weekly imbalance and a daily imbalance. So we have a little bit of a situation of supply and demand sandwich right here. Of course, the weekly should hold more importance, but judging by how the market looks like and how it responded from the daily right now, I am very 50-50, and I do believe we're starting to get a couple of bullish signs right now, but that is too early to say. So again, I don't have any bias right now. I don't have any bias. I just have potential confluences, and it really depends on what the market will do after Wednesday's FOMC. Only then, of course, I might actually make my analysis on Thursday after the FOMC to potentially see what is happening. So for now, staying over on the sidelines. There could be some intraday trades to be taken, but again, be very, very careful. EURUSD, pretty much the same story as the DXY. We're having that monthly imbalance. The market beautifully rejected on February, and right now we're trying to push up, and we're getting a lot of that resistance, again, potentially above that previous monthly high. We're very nicely rejecting so far above it. So again, that is not a great sign, but of course, next week, everything could change. Now, here we are on the weekly time frame, and we did also actually create a weekly imbalance right here, which is, of course, a good bullish sign. But also looking at the overall candles, I don't like this candle right here. It's an inside bar. It's not very bullish to potentially suggest higher prices. It's not really reacting. Of course, yeah, we have that previous monthly high that we looked like we're actually breaking last week. And right now, coming back below it. So again, this weekly imbalance next week is going to determine a lot of things. Now, again, We have a lot of news, especially for the USD. We have also a lot of news for the euro. We have a lot of news for the pound. So it is going to be tricky. Now, again, dropping onto the daily time frame, we're having also that bearish daily imbalance. And again, to me, it was logical for the market after we made this very nice impulse. We had, of course, that first imbalance. We had day one reject, day two reject on the CPI. Day three already looked like it wanted to pop higher. So I was quite convinced that we could potentially go higher. But there were already lower time frames showing us that we didn't have any imbalances going higher. And then all of a sudden on Thursday, we just dropped. Again, there were some news about the Italian bonds getting actually better than the German ones. A lot of money flowing into them. Then, of course, exiting the euro itself. A lot of potential arguments that you can think of. But again, I don't care much about those because I see price is giving me a bearish sign right here. So I don't care why it happened. All I care to see is right now if we're going to follow through. Now, the only potential setup that I'm going to entertain to take early this week is if we first tap into the daily imbalance and then potentially drive us into the week. That is going to be a very easy low-hanging fruit setup, of course, if it happens and if it provides the lower time frame confirmations. If we open bearish and if we first tap into the weekly imbalance, well, then everything changes because we have to be dropping to the hourly, we have to be dropping to the hourly time frame to be looking for signs whether it's going to hold or not, right? Now, again, here we're having that massive bearish push. There was a long trade I took here, just targeting that big imbalance. So technically on this long, the DXY also looked good. That is an intraday trade. I'm not going to go into it. The other trade I lost was here. I literally I entered on this candle and then the next candle swept me out and then it continued. Very not nice, right? So again, not much value if I break down the trades. But again, right now, very 50-50. We're having a slight bit of a sign here on the hourly time frame that it wants to continue higher. But again, it's very late. That doesn't matter as much. So once again, if we do have that drive into this daily imbalance, and then potentially we can have a look at some lower time frame entries towards the weekly one. That could be an easy trade. But if that does not happen, and if the market starts to chop, be very careful because in a week like this, you could take so many losses until the news release. Then the news release comes out, then you have the actual trades, but you're already kind of blown up and in the low mood. So again, be patient and wait for the right time to strike, which is after Wednesday for all USDs pretty much. I want for us to look carefully at GU because this pair has been giving some signs and it has been actually different than the rest of the USDs like EU, AU, NU. What we have on GU happening right now is we're actually breaking above that monthly high, right? It's not the overall swing high because if we actually look at the overall range, it could actually be this one. But if you also look at it in a more shorter term manner and also studying the imbalances, we had this order flow range going lower with that bearish imbalance that failed, creating a new bullish one. So actually, if I look at the very, very recent order flow, which I nowadays read with imbalances, this is what I'm currently training myself to do. This is the very recent from high to low. The market did not tap into the monthly imbalance, but it already went on and took out the monthly high. And looking at the candle right now, it does look like a huge rejection. And because usually the major currencies there are correlated, and one currency can tell you something about the next one. If GU is actually right now about to become weak after sweeping this high and then maybe wants to drive a little bit lower, then that immediately offers us a sign that, okay, so then potentially the other ones could do the same. Now here on the weekly time frame, similar again to the rest, we are having that weekly imbalance, which I do not like at all. It's coming on all the pairs. It's coming from a, well, it's not necessarily a sweep yet, but it's coming from taking out that previous monthly high and very massively rejecting this week. Now again, this weekly imbalance is going to potentially determine whether we're going to react from here and head higher or whether we break it and head for the monthly imbalance, or of course, first of all, we could target this low. So very important week. And I thought that this week was actually going to be very important with all the USD news, but again, not actually looking into the next one, which is the current incoming one. It's quite more important actually. So what do we have here on GU? Once again, we have that daily imbalance going higher, but again, we just took out that monthly high. So again, if we want to continue going higher, yes, of course, we'd like to be looking at that daily imbalance, but after taking out that massive high, we could expect a little bit of a deeper pullback, which we had. Monday came in, tapped into the imbalance. Tuesday came even deeper, rejected. Then Wednesday, consolidated, right? If it wanted to go bullish, it should have gone bullish on that day. And then on Thursday, we keep dropping lower. And then on Friday, we also keep dropping lower. So again, currently, the overall kind of this week, the order flow shifted a little bit bearish. But once again, we are going to be having this supply and demand sandwich. So similar to EU again, an easy trade will be at top of the daily imbalance, then to potentially drive it into the weekly. But judging by the candle looking quite bearish, it could be very easily just open and tap the weekly imbalance. And then of course from there, all we have to do is just read price. You can see it's super close to the weekly imbalance. So to me, it's not very efficient to go all the way up to daily and then all the way down to weekly. It just makes sense for the market to open, tap weekly, and then of course decide what it wants to do. So that is pretty much GU. I'm not going to be dropping below the 4-hourly time frame. On the 4-hourly time frame, we do not have anything. So we just had that very big 4-hourly imbalance. I had some members taking longs. I did take EU long, but some members took GU long after sweeping previous daily low. So as I said, the the low hanging fruit target is actually going to be this imbalance. We tapped it and we immediately reversed. So right now, 4-hourly time frame is a little bit of a consolidation and we're stuck between daily and weekly imbalances. So again, let's see which one taps first. Let's see what happens. And as usual, wait for price to develop because it's essentially just candles and price that is going to show you what is going to happen next. And you only strike when you are very, very, very certain of your bias. Let's have a quick look at the Aussie dollar. Now, once again, here we're having that monthly imbalance. The market looks like it wants to react. And yeah, it tries to push right now. It's having a little bit of a difficulty of pushing up. So is it actually going to end up pushing higher? Let's see. AUD/USD is a pair that did not make a weekly imbalance going higher. So only EU and GU did. Remember what I told you about the different currency pairs actually giving us signs about what is going to happen on the other one, right? So seeing that weakness on AUD/USD, potentially NZD/USD seeing even more weakness, that is sketchy. So of course, because usually those four move together. So if AU and NU start going down, that already gives us signs that EU and GU could potentially go down. So a very important bearish sign for me on AUD/USD is that we did not form a weekly bullish imbalance this week. We had a very nice expansion going higher. This week should not have crossed this line. It did, okay? Now, of course, going on to the daily time frame, what are we having? We're having signs of potentially the order flow once again shifting. We had that daily imbalance right here. We tapped, and then we just failed. So then, of course, if we fail the first one, we can, of course, chase the second one that we're currently tapping into. But this right now holds, I would say, it holds a little bit of a less of an importance, especially when we're returning at it bearish. So I would say I am actually quite short biased on AUD/USD, and we have a lot of news. Actually, on Tuesday, we have the rate statement, the press conference, and everything about AUD. So Tuesday is going to determine what happens going forward. I would just call it very briefly that I'm a little bit more bearish than bullish. So if we happen to pull back into this daily imbalance, and then of course happen to have a short setup, that could potentially be interesting. Right now on the 4-hourly time frame, we don't have anything. The very last imbalance that we tapped was here. This kind of got wicked 3 times, which is also not nice. Choppy Friday overall. So again, stuck between those two zones. But what I'm going to tell you is that the bearish one holds more importance. Why? Well, because it's the most recent order flow range going lower. Okay. And that is your first sign that potentially this overall leg here from this low to this high could potentially fail. So of course, let's see what happens next week. Again, wait for the AUD news to come out. NZD/USD is offering us even a better signal for potentially the currencies reversing. You can see, so this one tapped the monthly imbalance in January, all right? February again came into it, swept the previous monthly low and rejected. So this month, if it wants to go higher, it should already push higher, but it's not pushing higher, right? Weekly time frame, it has zero bullish confluences. It's quite choppy, I would say. But overall, like tries to push up, massive engulfing. Tries to push up, massive engulfing. So what I can already foresee, this is a little bit of a long-term target. Of course, the first target that you're going to be looking for this week is going to be this low. But of course, at the end of the day, we could be actually coming down for this monthly low right here. Daily time frame, again, very choppy. Moved up, moved down, bearish imbalance disrespected, bullish imbalance disrespected. This is what I call a consolidation. when you have both sides of the imbalances being disrespected, technically what you're having is a consolidation, right? Again, here we have bearish, disrespected. Then here we have, do we have any bullish ones? Yeah, we have bullish ones, disrespected. We have bearish ones, disrespected. Bullish ones, disrespected. So what is this? Consolidation. Very nice and very simple. Now, again, based on all the signs that we gathered, even look at the NZUSD, it was way more imposing on Friday. I was actually looking to short it on Friday, but it went very, very, very fast. So it's just massively pushing. So the daily imbalance is very far away. So you can already be looking for something on the 4-hour time frame if it has, but it doesn't have anything. Yeah, it has a very tiny little one right here, but I wouldn't really count this. I don't like small imbalances that you can't even draw, right? So I would say give this one some time, and the Aussie is probably going to be better because we have a lot of news for the Aussie. But seeing the NZD already flush crazily like this, it might actually give us a little bit of signs that Aussie dollar could also flush like this as well. So again, overall bearish bias immediately during the week. I do not have any setups. What I would appreciate if we have is a new daily imbalance that is going to form after Monday. So Monday does not have to tap this line. Here, I think it doesn't really make sense for it to tap because there has to be a very massive bullish candle. Of course, anything could happen, but we should not tap this daily zone. And if we then have a new daily imbalance, then I do believe there could be a very nice short tapping into that imbalance, targeting this low. Very nice and easy trade. So let's potentially see. All right, having a look at gold. Now, once again, when an instrument reaches all-time highs, it usually gets a little bit tricky because you no longer have liquidity to the left. We are taking a lot of liquidity in the form of the all-time highs, liquidity pretty much. So it gets a little bit tricky. And what I would actually suggest is that we always wait for some sort of a pullback first, and then again target the all-time highs. Don't try to catch the top, and don't try to keep chasing bullish prices because the probability is decreased. Now, here we are on this week, actually breaking all-time highs right here. And this week, guess what? We consolidate. Probably in preparation for next week. Now, gold is actually looking pretty good for potential long. But again, is the overall sentiment of the market going to support that? We're going to see next week. Now, here we have a very massive weekly push. We have one imbalance here. We have a brand new imbalance right here that perfectly aligns with this overall consolidation area that oftentimes, like for example, there were where institutions stack the orders, they massively push. So we do not really expect, if the market is going to be bullish, for us to come all the way down, right? It doesn't make sense. So if we actually start coming all the way down, then we can even expect a potential reversal, okay? So right now we should be getting the first signs of a potential, another bullish move. Now on the daily time frame, we are rather choppy this week again. Like Monday, we did form an imbalance that got disrespected, and then we just chopped around. So honestly, on gold, I would wait right now. I would focus as a kind of inflection point as this weekly imbalance to potentially tap into it, and then from there look for daily and look for even 4-hourly signs about what we want to do from that zone. Currently, again, if you're trading gold, I do believe we are in a little bit of a tricky time because, again, just judging by the daily, it is consolidating. We don't have any areas of interest. Then on the 4-hourly time frame, what are we having? The same thing that I told you about on NU. Imbalances just being disrespected. Bearish, disrespected here. Bullish, disrespected. Bearish, disrespected. Bullish, disrespected. What is this? It's consolidation. So currently you're trading in a consolidation. So again, wait for that hard time frame imbalance to tap. And then, of course, wait to see what is going to be happening from there. So again, gold requires a little bit of patience. Be careful trading it right now. Wait for that weekly imbalance. Then, of course, after Wednesday, I'm going to give you an update on it. Let's have a look at USD JPY. Now, again, seeing on the monthly time frame, we don't have much to work with. Apart that, of course, we're overall bullish. And we could be targeting that previous monthly high. And of course that high, and of course the overall kind of all-time highs here that didn't get taken. Then we transfer onto the weekly time frame. Look at this, right? So this is not an imbalance that I would think that the market will potentially hold. It's super small. If I draw it, we're probably not going to see it. Okay, so not looking great in terms of bearishness. And again, that gives us overall a sign about the dollar, which we already saw on the DXY. It's starting to look a little bit bullish. Now, UJ is a pair that I observe from time to time, but I'm not really focused on it on an intraday basis. I'm mainly focused like on EU, GU, I'm trading DAX, I'm looking at the indices as well. But UJ always goes under my radar. Now here we had that daily bearish imbalance that immediately got disrespected on Monday to tap into that second one. So when Monday actually happened, I said, well, I'm not really interested in trading this. We took out the first one, we tapped into the second one. Right now, the market has to decide what it wants to do. And then, yes, on Wednesday, it tried to decide what it wants to do here. But then look at Thursday bullish and then look at Friday bullish. So there was actually a lovely trade on Friday that I spotted, but it didn't give an entry. Or it did, but it didn't give a pullback. And if we already transfer onto the hourly time frame, all the way from the downside here, the first time we failed that bullish daily imbalance, we started printing new bullish ones. Bullish one right here, bullish one right here, bullish one here, impulsing higher, bullish one right there. This is pretty much the trades that I wanted to take on Friday, but it went very fast. Look at this. Now, this is bullish order flow. That is bullish structure, bullish order flow, showing us that the market currently is actually wanting to push higher. And looking at the overall daily, this here doesn't mean like it wants to actually push down. So the very next immediate target for me, because again, every odd imbalance to the left is going to be a target, but not something to tap and reverse. I use them for targets. It's pretty much going to be this daily imbalance. So if we get a potential long into that, that could be an easy target. But once again, we have a JPY press conference. We have a JPY monetary policy decision on Tuesday. So guess what? The market can do just something like this. So don't focus too much on forecasting. Don't focus too much on like trying to know where the market is going to go, because pretty much you do this on a daily basis. You just sit down in the morning. All right, what is very likely to happen today? This, okay, let me try to trade it. So right now, again, if you really want, of course, I do foresee the market potentially pushing a little bit higher towards that daily imbalance. That is the very potential easy target. How can we potentially get there? Well, we have a very recent new fall imbalance being created. On the daily, we don't have anything to actually pull back to. Of course, we could have a consolidation day to form a new daily imbalance that we can then potentially trade into on Tuesday and actually get a long. But of course, we have to wait and we have to see. So overall, seeing that little bit of a bullish kind of confluences here on the USD JPY makes me think that the dollar could actually go long. Will it? Let's see, of course, after the news. But overall, bullish bias, low-hanging fruit is that daily imbalance right here. All right, it's time to look at some indices. Now, if the dollar actually ends up going higher, we can see the indices going lower, and the indices are in a big need of a potential pullback, right? We have been massively attacking all-time highs. So pretty much since we started here, we have been pushing very nicely higher. So potentially like it's high time we come back to retest like this overall area. So of course that could be a potential target that we can be looking to for the market if of course it starts showing us bearish signs to potentially go. Now again, we have 13 days for that next monthly candle to form. We could have a new monthly imbalance, but of course it's a little bit early to already say this. Now, a very good signs for the market potentially actually wanting to reverse is that we do not have right now anything happening on the weekly. It's 2 weeks of a chop. Indices have been a little bit tricky to be trading the last 3 weeks. Honestly, I haven't taken any indices trades. Actually, I'm monitoring them every single day, but it's just like it doesn't make a lot of sense. There could be some scalps here and there, but nothing that is like very high probability, which is essentially the trades that I want to take. Now on the daily time frame, nothing on the weekly. We go to the daily. Well, there was something on the weekly, which is that very tiny little bit of an imbalance that we could potentially use for, if of course the market goes bearish, that will be the first area that it's going to rush towards. Daily time frame, we keep getting those bearish signs. We again, first of all, went higher, no imbalances. Of course, then we tried to go higher. We once again came in to sweep the all-time highs, and we massively rejected, breaking below right now the only daily imbalance bullish that we have. That immediately makes that this daily low the next objective. Okay, so it's starting to look already a little bit bearish. Now, on the only high probability trade I saw this week was once again on Friday. There was a very high probability trade on the CPI on Tuesday, but it was very ugly on the lower time frames. I was looking for a 15, for a 5-minute, but that CPI wick destroyed everything. So I didn't really look at it at all. at that time. So here we had 4-hourly supply, 4-hourly imbalance. The market tapped into it, but it just tapped and it just boom. So here, like, it came in very choppy. It started showing us signs, like it started making bearish imbalances and respected them. But I'm looking for a New York Stock Exchange open, and pretty much when that happened, even before that, 1530 is the open. Even before that, we just massively rolled down. So there was a short, but again, early for me, absolutely could have been taken though. But again, it is what it is. I have a time alarm comes out, New York Stock Exchange open. Let's see what happens. Now, back to the 4-hourly time frame. What I see right now is a overall, I would say, confirmed order flow bearish. Why? Shift, structure shift, imbalance, tapped, creating a new one with another structure shift and a body break. This to me is a bearish market on the 4-hourly time frame. So what I would expect on the indices is for us to drive into that daily liquidity point. Now, the question is, are we going to pull back all the way to the 4-hourly imbalance, or are we going to respond from something on the lower time frame? Because already this week, it already went quite high enough. So if there is something on the hourly to push price, not really. So of course, it's a little bit 50-50. We have to see how it opens. But Monday is usually not a very good trading day for indices, keeping in mind we also do not have any news on Monday and all the news that are incoming this week. So I'm going to be careful, but overall I'm going to tell you that I am more bearishly inclined on SPX ideally. We're having a beautiful 4-hourly order flow bearish. Daily time frame is failing. First target this low. Let's see. Looking at Nasdaq, you can see the candle, the monthly candle on Nasdaq is already looking quite bearish. And in the next 13 days, if we come and tap this zone, this is not a zone, this is potentially the candle one of a potential imbalance being created. If we tap this one, failing to make a new bullish imbalance, then of course our immediate target will become this monthly imbalance right here. So we're going to be having a lot of potential space to be pushing down. So it's a very important detail right here. On the weekly time frame, we don't have anything, which is also a good sign, because if we don't have any bullishness, then of course that means the market could potentially want to go down. But then we jump onto the daily time frame, and guess what? We are consolidating. Very simply said, we are consolidating. And of course, the last, the last 2 weeks are, again, I haven't taken any trades on the indices. They're just choppy. They are just choppy. Like nothing on the daily, honestly. This one already took a lot of liquidity on Friday. It just rushed towards the liquidity on Friday, which is very interesting. So right now, again, essentially what I'm going to be looking for is for daily imbalances pointing lower. If we close that monthly imbalance gap, then of course all of these lows become target until that monthly imbalance comes in. But of course that is a little bit ahead in time. Now here again on the 4-hourly time frame, we have been having a simple consolidation. Again, bullish imbalances, disrespected, bearish, no, bullish, no. Again, the only trade this week was on Tuesday CPI, but I didn't enter. It was very tricky on the lower time frames. I preferred to let it go, and yeah, pretty much that is the only clear move, especially on SPX. Look quite better. Imbalance zone here. Oh, demand zone to the left. Pretty good. Then here again, we started shifting bearish. There is the first 4-hourly shift. There is the second 4-hourly shift. There is the third 4-hourly shift. So if you actually have a look at NAS, it's actually even bearisher. It's even more bearish than SPX. So again, right now, taking this massive liquidity, a lot of things could happen. Essentially, we can expect a potential pullback into this area that looks a little bit too much to require from price. I do believe it can already start making new ones and potentially driving the price lower. But what I'm going to be looking for is, once again, waiting for the market to get clear. Because if the market is chopping, like say, I don't know, 60-70% of the times, that is when you lose money. This is why you potentially have like losing months, losing weeks, and break even, and getting confused when you don't get any trade ideas. But then when the market starts trending, when you actually start getting the clear, crisp setups, that is when it's time to actually get in, right? But it's a very big skill that I'm still training myself to it, of course, is to actually recognize when those conditions are actually out. Because from here, you can already forecast, like since this push up, then push down and push up, you can already see that it's chopping. So this is not a good time to get involved. But as right now, we're starting to actually shift lower, and as the overall picture of the market is starting to make a little bit more sense, then of course you get more confidence, you get clear draw on liquidity, potentially knowing where the market is going, and then you take clear trades. So again, wait for those conditions and know actually what they are for you, because you might actually be a real monster trading in ranges. Who knows? So figure that out for yourself. Let's have a quick look at DAX. Now this one is still very nicely pushing higher. The monthly time frame looks rather bullish. Is it also going to potentially reverse a little bit with the rest of the indices? Again, we don't know. We had a weekly imbalance that didn't tap this week, which is rather strange, but of course it reacted from a daily imbalance right here. It chopped for a couple of days. There it is. No, it didn't react from anything. We just, there is Thursday, there is Friday. So on Monday, we pushed lower a little bit, thinking that we're going to go to that weekly imbalance. Then we very nicely expanded. Then we had candle 3 of potential new daily imbalance that got created. And there was an absolutely lovely trade that I did not take due to spread, because it developed even kind of on Frankfurt Open, and my spread was 7 pips on my live account, and it was, I didn't want to enter, and it ended up playing out beautifully. Now here on the daily time frame, this is the last area that we have. The market failed to push higher. Now we're having another bullish candle. So essentially, if this market is going to go higher, I would like to see it for the daily time frame to keep pushing higher, and for the quality time frames to give me signs that of course it wants to push higher. Now it's not that bad actually. We have this quality imbalance here, actually tapping it on late on Friday and already rejecting. So you can already, like in an ideal world, you can already look to be taking out the highs, but here we're coming off from a sweep of all-time highs. Very massive rejection. Looks good. Personally, I would just give DAX a little bit of time right now. We're trading very, very, very high. And again, as I told you, when you're trading all-time highs, wait for the market to give you a pullback, to tap into something, and then wait for it to actually give you the clear target. Also similar on DAX, absolutely beautiful trade on that CPI, but none of those provided like a nice setup. I definitely really regret not taking it, because every single week there is one good setup that happens, and this week it was on Tuesday on the indices and also on DAX. But again, if I drop like to the 15-minute and to the lower time frames, it was a little bit tricky with a massive wick right that destroyed everything. So currently I'm just going to wait. Again, looking at the rest of the indices that are a little bit choppy, you can already see that this one is not very clear as well. Like you can see that it's an overall consolidation. So I am going to be very, very, very patient with this one and potentially looking for signs. It's going to impulse higher to continue. It's going to go lower to continue lower. Because if it goes lower, this is what I'm excited about. Because if actually the indices start going lower, we're going to be having clear targets. No longer targeting all-time highs. But if we start actually reversing lower with that shift of sentiment, then that weekly imbalance immediately becomes a target for me. So then, of course, we can take all the shorts we want. But for now, I'm personally waiting because I don't want to long it anymore and just like targeting a sweep of the all-time highs, because that is essentially what we have been doing this week. US 30, also an overall bearish candle so far. Again, we're having that monthly imbalance as a potential target. If there is nothing to stop price on the weekly, I don't think there is something to stop it on the weekly. Nope. Again, we're having overall, I would say even 4 weeks of even more. Like since February, you can see this one is not moving great. It's accumulating on the top. And if you drop to the daily time frame, US 30 is not looking great. It's not looking great. Bearish, bullish, bearish right now. Nothing on the daily. Yeah, okay, well, not really nothing. We had that bullish daily imbalance that failed. So that immediately gives us a little bit of context that we could be going for this low as the next target. Then, of course, as we start even making daily imbalances lower, then, of course, that monthly imbalance becomes the overall draw on liquidity. So, yeah, that is pretty much it. And then, of course, on the quality time frame, we're having a very big chop. Push higher, push lower, created this volume imbalance with a structure shift. Didn't pull back into it, didn't make a new one. I don't like US 30, honestly. I would much prefer to trade DAX in London and then S&P and NASDAQ in New York. So US 30, I only look at it for signs, because actually if this one is also kind of looking like it wants to shift lower, well, that potentially gives me signs about SPX and NAS because they're all moving together. So let's see, but overall US 30, not interested at all. All right, full circle back. Now, again, next week is super important because we have so many news. We have so many news for all the different currency pairs. But of course, more importantly, we have a lot of interest rates decisions, a lot of press conferences for JPY, for AUD, for GBP, and for the USD. Like pretty much all the major currencies. Of course, the euro was already out, but we have a lot of euro news as well. So we have a lot of things happening. Of course, the market is looking a little bit 50-50, of course, with the DXY showing us bearish signs, of course, but also showing us bullish signs already starting to get priced into the market. We are starting to see, I feel like after going through the pairs, that we're having a little bit of a sentiment shift. Indices are starting to point lower, which means bullish dollar. The major pairs are starting to also point a little bit lower, which of course means a bullish dollar. So I would say, again, on the DXY, on EU, and on GU, we're having a weekly imbalance to potentially work with that is going to give us some sort of a rejection. But if we start having clear bearish structure afterwards, then we're going to be having clear targets targeting like all the way to the lows, and all the lows are going to potentially become liquidity. Now, this is potentially going to happen after Wednesday's FOMC and interest rates, and of course after Powell speaks. Aussie dollar and NZD dollar are already giving us bearish signs. Those two do not have a weekly bullish imbalance to potentially stop price from going lower. So this is again one of those signs of a sentiment shift. So again, if you can take a short on NU or AU, looks pretty good. Gold all-time highs. Now this one is a little bit 50-50 because if the dollar goes bullish, this one should go bearish, but so far it's actually quite bullish. But again, is it time to start pulling back? The inflection point this week is that weekly imbalance to potentially see if the market is going to reject from it or potentially blow the floor. Then of course we can be looking for lower prices. USD JPY already showing us bullish signs. That perfectly aligns with that kind of bullish scenario we have for the DXY. So if we get some very nice longs on USD JPY, that could be nice, targeting new all-time highs. Now again, I didn't cover GJ and EJ because they're just a waste of time. There is nothing. And the indices, again, showing us very first signs for a potential reversal. But again, I truly want to confirm that reversal with daily imbalances going lower. So pretty much waiting for Monday, waiting for Tuesday, waiting for Wednesday for FOMC to come out. And then potentially, even if you just have 2 days to trade, if you make profits on those 2 days, you're having a profitable week. Okay, not every day you should be trading. You should be waiting like a sniper for the right day to be taking your trades. Okay, SPX, Nasdaq already taking out lows. Let's see if we're gonna have a daily imbalance to potentially then drive us all the way into the monthly imbalance down there. That is gonna be a very big target. DAX, I'm going to skip it for now because it's looking quite choppy, just sweeping all-time highs and doing nothing. US 30 is a little bit choppy, but also gives us a little bit of a bearish sign. You can see that also US 30 hasn't really broken the highs, while Nasdaq did and SPX did. So again, that shows us eagerness to potentially continue lower on US 30. That could also drive the other indices down as well. So Fanatics, let me know how was your week. Let me know what you're looking for next week. Let me know how you performed. Let me know any setups that you looked for. And let me know what is your focus going into next week. Remember to be checking your economic calendar every single day and stay tuned for my analysis probably on Thursday or Wednesday.